the first concept from that report that I really want to dive into is this idea of factory farm unicorns. What is a factory farm unicorn, and why are we not going to see these anymore going forward?
Look, I think there's a bunch of dynamics behind this, but the basic idea of a factory farm unicorn was that, in the last bunch of years, you had this weird situation kind of come together where one, the public market, let's work backwards from the end of the factory lines. The public market was really looking for tech growth stories that looked a certain way, right? And there was kind of this understanding that if you deliver these types of metrics in a SaaS company doing X, Y, and Z, you were worth a few $1 billion and it was a good story. People wanted to buy the IPO, right? So that's like the end of the factory line. The question is, well, how do you produce these things? And kind of because there was that demand, right, for those, especially when we talk about the zero interest rate environment and why that caused that demand, you ended up kind of with this system that didn't used to exist in venture capital, but it really came together where there was this round-based system starting from seed to A to B to C to D, where everyone kind of understood what the metrics were you were supposed to hit, right? And you kind of just hit the metrics, and then someone else would price your startup pretty efficiently, do the next amount of work, put the next amount of capital on, and move it down the factory line until you got a public company out the end, which is sold to the public market. Now, the problem was, and they're pretty factory farm because, instead, if you think about like a free-range startup would be the way it used to be, right? Which is you have some crazy idea for some founder, you get some seed capital, you get it going, you hit some milestones, you start to get more confidence, some investors get attracted to it, maybe you get a Series A done, and like each round of capital is a little bit bespoke. It's not really a market, right? The way it ended up being in the last decade, it was kind of more like there are investors and different people have different theses about what things are worth, pretty opaque. But we ended up in the last decade with this like very cookie cutter system, right? So you could end up doing just your slice of the pie, your stage of production, and pass it on through the factory until you got a public company. It's all falling apart. And like, that doesn't mean there's no such thing as a startup anymore. It doesn't mean anything's dead. Like, there's a lot of amazing companies to build. You've built a great one. Like, there's a lot of cool stuff going on. But it does mean that this kind of factory farm system where maybe you start with YC and you go to your seed investors, you go from seed to A once you have $1 million in ARR and it's super efficiently priced because everyone knows what the metrics are they're looking for, to the B to the C, all the way to public company, that game is over. And then unfortunately, there's going to be a lot, to use the factory farm analogy, there's a lot of product, right, which is startups in this case, that kind of were somewhere around the CD range that are going to get kind of hung out to dry on the line. It's like expiring inventory, right, of startups, right, which I think is a big challenge for the industry.
Now, it seemed like to me in this kind of, let's say, 2018 to 2021 timeframe that you're really kind of diving into, it seemed like most of the VC bets to me seem very consensus.
Totally.
It's like every VC thought it was a good company, and you might be willing to pay slightly more as how you got into the deal or something, or give slightly better terms. But it didn't seem like people were really going out of a limb, maybe a couple firms as the exceptions, and doing things that were non-consensus. Do you think that changes radically?
Well, look, here's the reality. The cynical reality of venture capital, right, is that I think in that period you're talking about, it went from being an investing business to an asset management business, right? And the reason is everyone said, if you're a venture capitalist, right, maybe you run a $100 million fund, we'll use random numbers, right? You make a little bit of money on the fees, but you really are getting paid for success, right? Like, you get paid when things work. That's a way less consistent business model. And candidly, as a capitalist, in some ways, a way less good business model than some of the business models that they run out east in buyout, right? With way bigger dollars or things like that. And so I think cynically what happened was a lot of firms that built a brand and had some good names kind of came to the realization that it's better to run lots of dollars, right, than it is necessarily to hit home runs, right? And like, the fees on it are astronomical and things like that. And so there became, with zero interest rate environment, where all the the LPs are saying, someone take our money, right? There became this incentive to run more and more dollars. And the way you do that is actually by having a factory model, a consensus model you can run over and over and over with more scale. Like, you need things to be pretty cookie cutter. That's why factories are good, right? The second all of a sudden you're in a more bespoke world, which is the way venture capital used to be, and I believe will be again, right? The markets are less clear. It's harder to run scaled dollars through the system, et cetera. But I will say, as a seed investor by profession these days, it's also a lot more interesting, right? So it's, in our firm, Slow Ventures, when we were doing our post-mortem in the last few years, the good news is we made everyone a lot of money, so people are happy. But it's funny because I'd say, we did a bunch of these consensus-y deals where we said, we like the company, we don't love
Yeah.
it, but we know how it's going to get a Series A, so we might as well seed it, and then we get the markup and we move on. All of the home runs, though, all the places we've actually made money, Auren, are the places where we've actually made fundamental bets that other people didn't believe. So it's kind of one of those things where, I think of those consensus deals do go away, but I also don't think those are the important companies most of the time.